Welcome to Fortune Maker's Insight Edge. Why did NVIDIA stock fall overnight? Let's break down the facts and what it means for you. NVIDIA instructed suppliers, including Amkor, Samsung, and Foxconn, to halt production of its China-specific H20 AI chip. Why? Chinese regulators cited security concerns and urged domestic firms to avoid the chip. NVIDIA clarified the H20 is not for military or government use, but the message is clear. Geopolitical pressure is real. This comes amid United States and China tech tensions and follows export control talks involving a 15% revenue share agreement. Response seen as pragmatic. CEO Jensen Huang's outreach to TSMC and exploration of next-gen chips, like B30A, for China, reflect resilience and adaptability. What is the market impact we saw? Shares extended their two-week losing streak, down another 3% this week as investors brace for Q2 earnings on August 27th. What analysts are saying? Despite headwinds, most analysts remain bullish. UBS just raised its price target to $205, betting on NVIDIA's long-term AI dominance. Still, some caution persists due to China exposure. Most analysts expect NVIDIA, to beat consensus estimates across the board when it reports its Q2 fiscal 2026 earnings on Wednesday, August 27th. Now let's understand the big picture. NVIDIA now makes up nearly 8% of the S&P 500. Its Q2 earnings could have the single largest impact on the index in coming weeks, on par with the Federal Reserve. Is this happening for the first time with NVIDIA? And what history tells us about NVIDIA's performance over last 20 years? Here's what history tells us. NVIDIA has seen major drawdowns before, 70% in 2008, 55% in 2018, 66% in 2022. Yet every time, it rebounded massively thanks to its AI and data center moat. Now, let's take a closer look at what institutional investors are doing. Hedge funds have been trimming their NVIDIA positions after the massive run-up earlier this year. While some profit-taking is evident, major players like ARK Invest, BlackRock, and others continue to hold strong core positions, though they're increasingly rotating into a more diversified basket of AI plays. Expect further rebalancing as we approach earnings and key Federal Reserve updates. So, what does this mean for me as an investor? If I am a long-term bullish, I will hold my core positions, trim any excess exposure, hedge near-term risks, and diversify into complementary sectors. If I am a short-term concerned, consider taking partial profits now and look to re-enter on dips after earnings and Fed clarity. If NVIDIA is more than 20 to 25% of my portfolio, then I am overexposed. I will consider trimming to 10 to 15%. Diversify into other AI leaders or hedging assets like treasuries or gold. For near-term risk around Jackson Hole and earnings. If I believe in the long-term story, AI spending is projected to hit $1 trillion by 2030, and NVIDIA still owns 90% of the AI chip market. I will hold core position but expect volatility. I will keep 30 to 40% of my portfolio in cash or short-term bonds for buying dips. Please stay tuned for our detailed NVIDIA earnings analysis coming later today or tomorrow. Subscribe now for timely insights, expert analysis, and strategies to keep you ahead in the market. Don't miss out. Join our exclusive WhatsApp channel, link in description, where smart investors stay ahead of the market. Get real-time stock analysis, proven strategies, critical market updates, and educational content that can give you the edge. This is where the real conversation happens. Be part of the inner circle now. Stay connected. Stay informed. With Fortune Maker's Insight Edge, your leading edge in the market.